Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, Dave Bartosiak here with Zacks top stock pick of the week. I've got one for you, and then later Jeremy Mullen has another. Mine is going to be cooler. It's Zacks rank number 2 by Globant, ticker GLOB. Let's take a look at Zacks.com to see why I like it so much. First and foremost, Zacks rank number 2 by, like I said before, D for value, A for growth, B for momentum. Help it round out with a VGM composite score of B. Now, here's the reason why I like it. The internet software and services industry is in the bottom 22% of our Zacks industry rank. Basically, the hate is in full effect. And we'll look at this a little bit later in our price, consensus, and EPS surprise chart. But look at the sales growth. 36% this year, 23% next year. That leads to EPS growth of 31% this year, 23% next year. That's still a ton of growth. I don't care who you are. I don't care what you do. That is nice. And this is happening recently. Over the course of the last 60 days, you have 4 analysts upping the ante for the current quarter, for next quarter, 6 for the current year, 4 for next year. What's that done to our Zacks consensus estimate? Well, current year, 449 up to 493. If you look at next year, 559 up to 608. So everything is moving in a positive direction. That, my friends, is a good thing. And if you look at the surprise history, something that we're going to see on the next chart too, little beats all along the way. That means they're doing a great job managing expectations, but they're also doing a great job of delivering. Now, my single favorite chart on Zacks.com, the price, consensus, and EPS surprise chart. This left y-axis is the EPS number. The right y-axis is the price. The little green arrows are earnings beats. The red arrow, yes, the singular red arrow back in 2017 is the last time this stock missed earnings. Look at where the price was, under 50. Since then, these multicolored lines represent the evolution of our Zacks consensus estimates over time. You can see sort of a clear-cut delineation that took place here, where these estimates started to tick down in early 2020. But it's not like they fell off of a cliff or anything. They just kind of teetered down a little bit and then troughed and rotated back up. What did the stock do? It continued to move to the upside. But now there's been a bit of a disconnect. Earnings, boom, through the roof. Whether you look at 2023, 2022, 2021, doesn't matter. Going up to the upside. But what's the stock doing? Going down. That is the sort of divergence I love to see, the divergence between the earnings and the stock price. This means we're seeing multiple contraction here. What's the reason for the multiple contraction? Well, we looked at the growth numbers. The answer is nothing, just the broad market that's down on this entire industry. So eventually, these stocks are going to stop going down. And when they do, it's going to be stocks like Globant that are going to lead the way higher. There you have it. That's why I picked Zacks rank number 2 by Globant, ticker GLOB, as my top stock pick of the week. Jeremy, what do you got for us, buddy?
Thanks, Dave. I'm Jeremy Mullen, and today I will be doing Target, ticker symbol TGT. The stock is a Zacks rank number 1 strong buy that is a popular general merchandise retailer that operates in the U.S. As many of you know, Target provides a variety of goods such as household essentials, groceries, electronics, toys, and apparel. I don't know about you guys, but after reviewing my family's credit card statement each month, Target always seems to dominate in the amount of transactions and sometimes price point. The company is coming off a big earnings beat earlier this month. The stock did surge at the report, but has since come in because of the geopolitical risks out there that we all know about. So, is this dip a buying opportunity? Well, let's talk a bit more about the company and dive into those earnings, then get to the charts. Okay, here I have up the profile page. A little bit of Target. They were originally founded in 1902 with the first actual Target store in 1962. Headquartered in Minneapolis, Minnesota. They have 2,000 stores and 400,000 employees. Target has almost a $96 billion market cap at the moment. We have Zacks style scores of B in value and growth and A in momentum. Forward PE is 14, and they pay a dividend of 1.74%. Now, the company has modernized its e-commerce and tech platforms, which have allowed it to thrive during COVID. Now, the question is for investors was if the pandemic spike in earnings was sustainable. And this last quarter proved Target was different than other stocks that surged during the pandemic. So let's look at some earnings here. And you can see this last quarter, we have 11.5% earnings beat. Now, this is nowhere near some of the previous quarters, especially during COVID, which at the height, we had 106% earnings beat, which started this acceleration higher. Still, we're seeing some earnings being sustained, which is good. So what investors want is for this to continue, and for it to continue, we need earnings to sustain. So that is good news. Digging into the earnings, EPS came in at $3.19 versus $2.86 expected. Now this was a 13th straight beat for the company. As you can see, we haven't missed since 2018 here. So revenues came in a little light. The company's seeing 30.6 billion versus the 31.5 billion, and that can be blamed on lower than expected holiday sales. That was the reason for the miss on revenues. Despite those lower sales, Target saw improved margins that had stronger guidance. The company said that Q1 same-store sales operating margins will be favorable in relation to historical performance. Additionally, fiscal year 2022 will see high single-digit growth with operating margins 8% or higher. Now, year-over-year comparable traffic was up 8.1%, which is pretty good. But the key is digital sales still saw a 9.2% increase year over year. So this is helping analysts take their estimates higher. So let's look at those. And we want to come down here and look at this magnitude to see where estimates are going. And over the last 60 days, we can see we're trending across all time frames higher. Okay, with the current quarter going from 274 to 306, that's a 13% jump. And if we look at the current year, that same time frame from here to here, we got 9% in the current year and 9% next year. So that's pretty good news there. Stifel was one of the analysts that had some commentary. They were very impressed with the robust e-commerce growth of that 9.2%. Firm sees Target sustaining its pandemic share gains and has a buy rating with a 280 price target of the stock. Now, the stock's trading just around 205, 210 in there. Other analysts are raising price targets as well. RBC has outperformed a 294 target. JP Morgan is at 290, and Deutsche Bank is at 353, up from 305. That's a price target that is over 70% from current levels. So let's see how we might get there. Let's bring up the charts. Okay, here's a chart looking in the last couple of years. We can see we had a minor sell-off into the COVID panic, not like other stocks. Some investors really knew that Target would benefit from what was happening. So after a couple of earnings, we saw the stock accelerate into the end of 2021 and then really take off to hit a high around 270. We had like kind of a double top here, and then obviously the market atmosphere kind of flipped, and we saw weakness into those recent lows. Now, I have a Fibonacci retracement drawn from these lows to these highs, and we get a buy zone from the 61.8% to the halfway back from 157 to 175 right in here. As you can see, that wick down almost hit that halfway back, and the buyers were so aggressive it didn't even test this. You can see that kind of shows strength that we couldn't even test that halfway back fully, and we bounced from there and then got the earnings report, which took the stock back up to 225. Now, you can see this recent pullback. So the question is there some opportunity short term in here? And we'll look at that in a second. But I kind of wanted to show you this big chart because the setup is 309. So we're getting closer to those analyst price targets up here. And what they're looking for technically is if we can count this as a halfway back tested, it gives me targets. I usually target the 23.6 up here. Now, if the market atmosphere weakens, I would definitely look for support in this area for a longer term move up here. But this could have been it. This could have been the test, and the trend might resume here. Let's zoom in and kind of see a shorter term setup, what we got. Yeah, here we go. So the 21-day moving average is the green, the blue is the 50-day, and the red is a 200. We are currently below all those. So that is a bearish signal. However, what could happen is perhaps this, I have another fib drawn up from these lows to highs, give us like a 200 level, the 200 level support, 61.8% retracement support, which would also be the gap fill. So if we saw some consolidation in here, hold, and then a move back over these moving averages, we could come up here and get that 200 day. Now, we might not see this gap fill because just like this down move was defended before the technical spot I would want to buy, this could see the same thing. So whether we get this move down here or not, I think the key is a move over this 50-day moving average, which is around 216. Above there, we could start getting bullish, especially if the market atmosphere turns. I could see a quick move up to this 237, maybe some choppiness and some resistance up here until next quarter when target has to prove itself again and perhaps can try to fill those longer term targets towards the end of the year or into early 2023. So bottom line is, despite all these negatives out there, the stock is well off its 2022 lows. This is better than most stocks can claim out there. And because of this, investors should consider Target as a place to hide in a weak market. These current trading levels could be a huge opportunity. And I think that you can either take a small position to feel it out, add over the 50-day, or add on if we get some support down in here. So, okay, that's it for me on my top stock pick. I hope you liked what you heard today. And if you did, please go to zacks.com/promo and check out Stocks Under 10 with Brian Bolin. Thank you and have a great day.